Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now in this video I'm continuing the explanation of income from other sources. Already in the last two videos I've explained you about what are the items of incomes that are taxable under the head income from other sources. I told you it is a residual head. If an income does not fit in the first four heads, that is income from salary, income from house property, profits and gains of business and profession, or capital gain. These four heads are specific heads. So if any income does not fit in the first four heads, it is taxable under income from other sources. The previous video I have explained you what are the items that may come under income from other sources. And I have explained you the dividend income. What are the provisions of Income Tax Act 1961 for the assessment year 2021-22 regarding dividend income? I have explained in the last video. Apart from that, interest on security. How to compute income from interest on security? Security means the bonds issued by government or debentures issued by limited companies. So if an investor invests the money in bonds or debentures, he will get interest. That is called interest on security. Now what are the provisions? Already I have explained the last video. So if you have not watched, I suggest you to go to the playlist of my channel. Select the subject advanced aspect of income tax. Unit number 2. Watch the first two videos. Definitely you can be able to get the command on this topic of income from other sources. Again I repeat, the subject advanced aspect of income tax is a little bit difficult subject. That means you have to give more concentration on theory videos. If you do not concentrate, if you do not take it seriously, these theory videos, then definitely every problem will be a difficult one for you. The problems are based on the provisions which I am explaining in this theory video. So watch the video till the end seriously, then definitely you can enjoy solving the problems on this subject of advanced aspect of income tax. Before explaining the topics in this video I'm going to explain you three topics. The first is winning from lottery, crossword puzzle, gambling, betting. These are called casual incomes. Separate provisions are given under Income Tax Act regarding the taxability of casual incomes. I am going to explain. Secondly, letting out of plant, machinery, furniture. So what are the provisions regarding taxability of letting out of plant, machinery, furniture? Thirdly, family pension received by legal heirs of a deceased employee. What are the provisions? I am going to explain. So before going in detail, take a screenshot of the notes which I have written on the board so that you can keep a permanent record just before examination. If you just review, definitely you can write the examination with full confidence. Take a screenshot, then I'll explain in detail. Come on. The first topic is winning from lotteries, etc. An assessee may win a lottery, may get a lottery or any other unexpected income. That means an income which is earned by element of chance. An income which is earned by an element of chance, unexpected income. That is called casual income. Example of casual incomes are winning from lottery, crossword puzzles, races including horse races, gambling, betting, or any such type of games where there is an element of chance. These are called casual incomes, and casual incomes are taxable under the head income from other sources. So what are the provisions regarding Income Tax Act 1961? I am going to explain. Winning from lottery, crossword puzzles, races including horse races, card games, or any other such type of games, gambling, betting, are called casual incomes. And these casual incomes are taxable under the income from other sources. No expenditure will be allowed as deduction from this income. Example, if an SSC has spent some expenditure on purchasing the lottery ticket or expenditure incurred in participating the game, then that expenditure will not be allowed as deduction. These are the points you have to remember while doing the problem. Now, gross prize amount is included in the total income. Normally, according to the provisions of Income Tax Act rules, when a casual income is declared, the issuing authority will deduct TDS and net amount will be paid to the winner. But Income Tax Act says we should not take the net amount, we want the gross amount. So whatever TDS is deducted, that will be added back. Example, winning from lottery, a person has received 1 lakh rupees, that is received. Already 30,000 rupees are deducted by the issuing authority. The gross amount will be 1,30,000. 1 lakh rupees is the net amount, 30,000 is the TDS. So net amount plus TDS is equal to gross amount. The gross winning should be taken under income from other sources. Now the income is taxed separately at a flat rate of tax 30%. So we have two types of taxes, slab rates and flat rate. The slab rate of tax is applied on normal income and flat rate is applied on special income. So this casual income is a special income. It is not taxable along with other incomes. It is separately taxable at a flat rate of 30% for the current assessment year 21-22. Then tax on lottery income. How much tax? Winning from lottery are taxed at a flat rate of 30% plus surcharge plus health and education cess. In the coming videos, I am going to explain you about the surcharge and health and education cess. Time being, remember the tax rate on casual income winning from lottery is 30%. Apart from 30% tax, surcharge if applicable. Surcharge is not applied in every case. Only on some conditions, surcharge will be applied. I'll explain you in the coming video. And health and education cess compulsory will be there for any income. 4% is the health and education cess. No deductions are allowed like cost of lottery ticket, participation fee, etc. Just now I told you, if the SSC says I have spent some 5,000 rupees on purchasing the lottery ticket and he got winning from lottery for 1 lakh rupees, the Income Tax Act says whatever expenditure you have incurred, that will not be allowed as deduction. Similarly, participation in the program. Participation in the program, expenditure is incurred, that is also not allowed as deduction. Now, received amount is always net amount, same is to be grossed up. Just now I told you, if in the problem received amount is given, you have to make it gross up. So how to gross up? Multiply net amount into 100 by 70. Net amount into 100 by 70. Why 100 by 70? Because 30% is the TDS. That's it. One special note you have to remember, any income which is not specific will be taken under income from other sources. Time and again I am repeating, income from other sources is a residual head. If an income does not fall specifically in the first 4 heads, it will be put to tax under income from other sources. So any income earned which is not a specific income, it is taxable here. But any expenditure incurred in order to earn that income, that will be deducted. That will be allowed as deduction. So any expenditure incurred in order to earn that income, that expenditure will be allowed as deduction. Income derived from owning and maintaining race horses is not taxable under income from other sources. It is taxable under income from business. Owning and maintaining horse races is different from winning from horse races. If winning from horse races is given, it is taxable under income from other sources. If profits from owning and maintaining race horses, that profit is taxable under profit from under this income from business. Now, letting of plant, machinery and furniture. First topic I have explained you about the casual income. Now second part is regarding letting out of plant, machinery and furniture. Sometimes an SSC will let out on hire plant, machinery, furniture. In that case, whatever rent or hire charges he receives, that is taxable under income from other sources, provided that should not be his business. If an SSC's business itself is letting out of plant, machinery, furniture, then the income will be business income. It is not other sources, it is business income. But if that is not his business to let out the plant, machinery, furniture, then the rent received will be taxable under income from other source. If an SSC has let out plant, machinery, furniture, rent or hire charges received will be treated as income from other sources. If letting of these assets is a part of the business, then such income will be treated as income under the profits and gains of business and profession. If the SSC's business itself is for letting a plant, machinery, furniture, then that is a business income. If it is not his business, but sometimes, casually, once upon a time, he will let out his plant, machinery, furniture, then the rent or hire charges received is taxable under income from other sources. If an SSC is sold, if an asset is sold on hire purchase agreement, then hire charges on such assets will be treated as business income. Sometimes an SSC will sell the goods on hire purchase system. So whatever hire charges he receives, that hire charges is not taxable under income from other sources. It is taxable under income from business. Last one, expenditure on repair, insurance premium, depreciation and any other expenditure incurred to earn such income will be allowed as deduction. See here, when an SSC is letting out plant, machinery, furniture, on this plant, machinery, furniture, he may incur some repairs, he may incur some insurance premium, depreciation will also be there on plant, machinery, furniture, or any other expenditure incurred in order to earn this income will be allowed as deduction. For example, if an SSC has earned the hire charges by letting of furniture, rupees 1 lakh, but on that furniture he has incurred some repair expenditure, 10,000, it will be deducted. He has incurred some insurance premium, 5,000, that will also be deducted. He will say depreciation on that furniture is 2,000, that will also be deducted. Any other expenditure if he has incurred on this furniture which is let out, that will also be deducted. So any expenditure regarding repair, insurance premium, depreciation or any other expenditure incurred to earn this income will be allowed as deduction. That's it. So 2 points I've completed: casual income and letting of plant, machinery and furniture. Now the last topic is regarding family pension received by legal heirs of a deceased employee. Actually, pension is the amount which is received after retirement. An employee has served a company for 20 years. After 20 years, he has given the resignation, resigned. Now he is getting the pension. So after retirement, a person receives pension from the employer during his lifetime. But sometimes if there is an agreement, then pension will be paid not only to the employee but also to the family members of the employee on the death of the employee. Mr. X died. After the death of Mr. X, Mrs. X is getting the pension. That is called family pension. That is called family pension. Income Tax Act has given some specific rules whether this family pension is taxable or not. Now, after the death of an employee, if the family pension received by legal heirs of the deceased, it is treated as income from other sources. First point, if the family member is receiving the family pension of the deceased employee, then this family pension is taxable in the hands of the legal heirs who are receiving this family pension. Under the head income from other sources. Deduction. A standard deduction is allowed under section 57(2)(a). Remember this section. A standard deduction is allowed under section 56(2)(a) to that person who is receiving family pension. Now Mrs. X is getting family pension after the death of Mr. X. Now Mrs. X is getting family pension, so she will be allowed deduction, standard deduction under section 57(2)(a), which is list of the following two amounts. The first is 1/3 of the pension received, and the second one is fixed to rupees 15,000. Whichever is less will be allowed as deduction. Now, exemption. Family pension received by family members of a person who has served in the services of central or state government and who has been awarded with gallantry awards like Veer Chakra or Mahavir Chakra is fully exempted from tax. Example, if a person is serving in the central government or state government, the person is a government employee, state government or central government, and the person has received some gallantry award like Veer Chakra or Mahavir Chakra, the person has received, and after the death of the person, his family member is receiving family pension. Income Tax Act says fully exempted, because this family pension is received by the deceased employee who was a central government employee or state government employee, and he received the gallantry award from the government. The gallantry award like Veer Chakra award or Mahavir Chakra award, then family pension is completely exempted. That point you have to remember. Secondly, similarly, family pension received by widow or children of a person. Family pension received by the widow or children of a person who has served armed forces or paramilitary forces, who has served the armed forces or paramilitary forces and died in operational activities, duties, is fully exempted. A person who is in armed forces or paramilitary forces and he died in the operational duties, then whatever family pension received by widow or children, that family pension is also exempted. Now the question is, what is meant by operational duty? If the person dies natural death, it is not exempted, it is taxable. But if the person died in operational duties, then the family pension received is exempted. So what are the operational duties? It includes action against extremists or antisocial elements. There was a war against antisocial elements or extremists, and during the war period, the person, the soldier, died. That means he died during operational activity. Then whatever pension the widow will receive, fully exempted. Secondly, enemy action in international war. If any international war between two countries are taking place, during the war period, the soldier died, again we can say he died in operational duty. So again family pension is exempted from tax. Last one, while dealing in national calamities, etc. Sometimes during national calamity, the armed forces or paramilitary forces will be called upon, and during that operations he died. Example, during earthquake or fire or flood. These are the natural calamities, and during natural calamities normally paramilitary forces or armed forces will be called upon, and during this operational activity, if the soldier died, then the widow or children receiving family pension exempted from tax. Right? So these are the provisions I have explained in this video regarding income from other sources. The points I have explained are casual incomes, letting of plant, machinery, furniture, and family pension. That's it. The next topic I'll continue in the next video. But before that, I want to declare that I have started a new channel on YouTube by name Khan's Accounting Institute. Khan's Accounting Institute. This second channel I have made only for those students who are pursuing IGCSE courses like Cambridge and Deduction. So if anyone of you are studying or pursuing IGCSE courses, for them that second channel is very, very useful. Even for you, if you want to gain the knowledge, you can go to my second channel. Please subscribe, just like how you have subscribed this channel. Subscribe that channel too and gain the knowledge, gain the confidence on the subjects. Inshallah, we'll continue the next topic in the next video.